What's going on, everyone? My name is Anthony, and in this video, I'm going to be doing an update of the markets and specifically AMC, which is the king of the meme stocks at the moment. So before we do that, I want to really quickly go into SPY, which reflects the S&P 500. So because of the recent hype in the meme stocks overall, we've seen pretty relative flatness in the markets. So just because of all the hype in the meme stocks, people aren't really trading S&P 500 stocks as much. So we've gotten just pretty much up and down motion and really a failure to get some bullish momentum kicked into the indexes. But if we zoom out overall to the broader market count, so we see here, I'm going to start off the count right down here. So this is a relative bottom, and we see the very clear start of an impulse wave to the upside. So we have a 1, 2, 3, and then a complex correction, fourth wave, and now we're working on that fifth wave upwards to finish off the bull market top. And then this should be around somewhere in July, maybe just somewhere in July, and then we'll start coming down to correct a lot of this upside that we've had over the past year or so. But for now, we're still in this bullish count, and even though we haven't gotten much momentum, so if I go down to the 5-minute chart, if I look at the recent price action over the past 2 weeks or so, it's been really flat. We've been slowly grinding upwards, and the reason for that is we've gapped up almost every single time, and then we've retraced a lot of that upside. And because there's so much buying power invested into meme stocks like AMC and GME, this buying power is not being invested into S&P 500 stocks and NASDAQ, and thus explains why we're kind of getting this low volume sideways action. But once we do get out of these meme stocks and the buying power slowly decreases, which I'll talk about later in this video, and some price predictions for the meme stocks, then we'll start to see some of that buying power flow back into regular stocks that are not heavily shorted. But in terms of the bullish count, so we can see here we have a very clear impulse wave to the upside, a 1, 2, 3, 4, 5 for the wave 1. And now we're kind of forming this weird correction for the wave 2. This is pretty much just the market's way of eating up time. But the good news is that even with this recent consolidation, nothing has changed about the bull count, and all we need to do is make sure that we are in calls when the wave 3 upside comes. Because so far, we can still see that there is definitely a very high probability chance of coming up to these levels. In fact, right now, I'm raising my price targets to hover around the 431, 432, 433 area by a minimum. And these are just simply one-to-one extensions of this wave 1 upwards. So I can actually derive them for you right here. So we can do wave 1 up and then drag it down to somewhere where the bottom of wave 2 might be. So let's say that we have the bottom of wave 2 finish at 417. Then we would have that one-to-one right there, as you see, at 433 right here. We can also increase this to say we bottom out right here, then we obviously raise the wave 3 price targets. But for now, I want to mention that because we could see an ABC formation, and the reason why I say that is because if we look at this upside right here, so this kind of really heavily chop up, gap up motion, so we have increase, downwards, increase, retracement, increase, and then up, gap up, and then a huge retracement. Because of this, this doesn't look like the start of the wave 3 to me. This looks to be part of some kind of weird flat correction or some kind of complex correction that would form a 3-wave pattern, so an A, B, C, or you could call this a W, X, Y if you really wanted to. Either way, there's been some chops, so I think that we might be coming down a little bit more for a little bit of slight downside. And these Fibonacci zones right here, so this is just derived from tracing the length of wave A onto the wave B. So let me do that for you right here. So we drag, this is the retracement, so we drag the length of A right here, and then we take it to the top of wave B. And we can see some clear buying zones right here. So 1.618 level is right around 417. And these have always been my original buy zones, so 418, 417. And so if we do get to these areas, let's say we slowly come down to touch these, I'm going to be adding even more to my calls right here. Right now, I'm not too heavily leveraged in calls, although I did add to some positions because we do have a very high probability chance of coming to the upside. But I'm not very heavily leveraged right now, and I will be signaling even more SPY calls in the future if we do come down to these levels. But for now, I want to make sure that we can escape this really horrible sideways motion, because this honestly is not very fun to trade. And as long as you can get some good buying zones and good areas of entry, this wave 3 upside will be really profitable. And we should see some more upside flow back into the market, especially when the hype from the meme stocks dies down. So that's just a quick summary of the technicals on the market. So basically, to summarize, we just want to come down to these levels. If we do, that's a huge buying opportunity. And as long as we ride the wave upwards for the wave 3, that should be really good profits. So nothing has changed about the technical analysis or the wave counts. Everything's still the same. We're just waiting for that impulsive move to the upside. And that should happen once we get out of the meme stocks and the buying power gets out of and it gets transferred over to other companies. So now we're going to go on to the Nasdaq index, which is reflected here in the triple Qs. So the bull count over here, I'm going to give you two scenarios. So I've talked about these in previous videos about how there's a possible split between the S&P 500 and the Nasdaq in terms of the wave counts. But for now, I don't really want to emphasize too much on the Nasdaq because it's a little bit less bullish than the S&P 500. But I'm going to go over the bull count for you right here. So in terms of just looking at this recent low, we see a wave 1 up, a wave 2 down, and then a wave 3 up, and then a huge complex correction for the wave 4. And now we're working on a wave 5 upwards possible, which is a possibility. Another possibility, like I mentioned in the past videos, is that we come for another complex correction. So we do a W, X, Y, and then an X, Z. So either way, we should see some upside in the Nasdaq. That will make sense because we're also expecting upside in the S&P 500. But if we do have this wave X upwards instead of a wave 5, which just means we have a failed impulse wave versus a real impulse wave, that means the price targets on the triple Qs are going to be a little bit less, so maybe around 345, somewhere around the all-time highs for the X wave. Whereas if we do have a real impulse wave, we could come up to 370 even, or possibly even 377. So this just changes the price targets, but overall, we should still see a little bit of upside to the triple Qs, which makes sense in accordance with the S&P 500 bullishness. There's another alternate count that I've seen a lot of other analysts talk about, and this would be saying that we're in an ABC pattern coming downwards. So we would have some kind of A, B, C here. This right now is pretty hard to reject it immediately. But the reason why I'm a little bit hesitant to adopting this count is because in the S&P 500, we see a very clear impulse wave forming. So that means upside is a very high chance of coming to the S&P 500, which means that if the triple Qs was heading downwards for some kind of impulsive C wave, that means the S&P 500 will have a lot of trouble going upwards, which doesn't agree well with this count. So I'm leaning more towards the fact that we're seeing upside in the triple Qs. And the good thing about this is that we'll know soon whether we're going to have some upside or not. So if we reject at these levels, so let's say we have the ABC count, and we reject here, and we start heading downwards, then that definitely confirms our this bear count. But if we start pushing higher, so if we start going any higher than this and start breaking the resistances and testing all-time highs, then this count is automatically going to be invalidated, especially if we go above all-time highs. So, but right now, so if I look at the retracement levels right here, so if I take the top of this wave, so this X wave or the start of the A wave, and we drag it down here, we're currently hovering around the 0.618 levels. So these are very heavy, high probability chances of stopping on the B wave. So if we draw that count again, these are very high chances of stopping on the B wave, just around these areas. So if we start to go higher, so we have 337 right here as the 0.786 level, if you can't see that clearly. If we do start heading higher than this, then this wave count, this bearish wave count, is going to look less and less valid. And I'm not leaning towards this. I would say this has a pretty low chance of happening, but I'm going to put that out here because that is a possibility. But so far, I'm leaning more towards coming up for some price targets of around at least 345, and then if we do see that impulsive wave formation, then we'll come up for 370, which will agree with the S&P 500 bullishness. So that's just going to be my update on the markets. Overall, nothing has changed. We're just waiting for some impulsive breaks to the upside. And now I'm going to go into AMC. So there's a lot to cover here. A lot of price action just today, yesterday, and the days before. So in my past video, we were sitting right around here, and I mentioned how we played puts on the wave 3 downwards for the wave 4. And let me get rid of all these EMAs so we can have the charts be a little bit clearer. And I'm sorry, there's a lot of Fibonacci extension levels. We kind of need a lot of these because we extended so far. As you can see, we're hovering around some really high extensions, so 3.618 and 2.618, and we perfectly reacted to them. But in terms of the stock right now, so in my past video, we were sitting right here, and I anticipate that we're going to have a wave 4. Now we've really started to push upwards for the wave 5 to the upside after this wave 4 temporary drop. And currently we're hovering around these resistance zones, as I mentioned. So I also mentioned in Discord that we're hovering around very high Fibonacci extension levels, so the 0.368 and the 2.618. So these are obviously very extended, and we can see we had a pretty strong reaction to these levels, and we have constant candlestick wick rejections. So this is not to say that we're going to not push higher. So in terms of just the stock, we're hovering around the last leg of the upside, just if you kind of try to um, count this in terms of wave theory, we can subdivide the wave 5 to the upside. So we have a 1, 2. We can possibly count this as a wave 4 and then a wave 5 upwards. And typically when you have really heavy meme stocks that are really far extended, we could see a double top possibly. We've already topped around 70 in the post market, and now we're hovering around 65. But as you see with meme stocks, we could gap up significantly and then keep pushing upwards. And then once the sell-off triggers, so say we have a rejection and we really keep pushing down, that sell-off will be fast, and you want to be in some kind of puts. If you're looking to trade them, you want to be in puts when that happens, and because it will happen before you know it. The sell-off will be insanely large when it does happen, just like if we see for the first wave of upside. So if I go back all the way to when the wave 1 happened, so let me go right here. So if we zoom in to this price action, we were hovering around these levels for a while, and then once the sell-off triggered, there's nothing really you can do to stop it. It happens extremely fast. Even if we push upwards, it happens again. Like the sell-off is just an instant gap down when we hover around these levels. Another example I want to give is Volkswagen. So this is another short squeeze that happened a really long time ago. So this is around 2008. So I have to go down to the weekly chart to kind of show you what's going on. So let's go back to 2008. So as you can see here, and I'm going to turn on the EMAs for this. When you do see a really huge price increase, like a parabolic price increase, this is going to form your needle stick candlestick, where you kind of see this huge candlestick wick touching upwards and then a huge return to the EMAs. So my point is, whenever you see price so far extended, it's going to return back down to its original levels or around that zone. It's just pretty much a rule of the markets. That's why you do not want to be caught up here or caught up here in your position. And it's okay if you take profits like not all the way at the top. It's okay. It's very hard to catch the top in any of these meme stocks, even if you're playing puts. But as long as you're either out of your position or in puts when it does start that impulsive move downwards, that is going to give you some profits. So now heading back, let's go back to AMC. So applying the same type of logic and analysis. So we'll go down to the 5-minute chart, and if we look at the current price action, so we're still hovering around the EMAs around that area, and we can see the 55 EMA right here in yellow is still slightly below. So we could try to touch this and maybe get a bounce. Tomorrow's trading day, I'll be keeping updates of AMC in the Discord, and I'll be sure to make sure everyone's up to date with how current trades are going with the stock. But we see the EMAs if I just look at the 1 hour time frame. So the 1 hour time frame, the EMAs are pretty important, and they tend to be a place where the stock prices tend to gravitate towards. So once again, we'll look at the 55 EMA here in yellow, and we can see it's probably going to come up like this and flatten out around these zones. And once the price action kind of pushes up for the last time and then it comes crashing down for that ABC correction, it's going to return back to these EMAs right here, and we're going to see kind of that flatlining at these areas. So if we're trying to catch the downside, obviously it's going to be very hard to catch the exact top, but as long as we're in the position when it starts that impulsive sell-off, that's going to get some good profits. The only question is how long will it take to start that sell-off, and price action over the next day or so will tell us the answer. But in terms of AMC, we are very heavily extended, as you can see, up 95% today. It's not going to keep doing that forever. It's just a world of markets. You're going to come down, you're going to come touch the EMAs. In terms of if you're really thinking about playing some more upside, I know that just like with any meme stock, there's no way to tell how far it can go. Technically, it can go as far as it wants, but in terms of just the sellers kicking in at certain levels, people are going to take profits eventually. And for me personally, I'm more interested in trying to catch that downside rather than getting that slight chance of getting on the upside at this point when you're so far overextended. But for me, I'm going to be keeping updates of AMC in my Discord, and yeah, so stay tuned for that. And in terms of the meme stock review, main focus is on AMC. Otherwise, I have some other stocks on the list, so RKT, Fubo, BlackBerry, and BBBY. And in terms of these stocks, as you can see, they're all very heavily overextended. But in terms of just AMC, when you start to see the impulsive sell-off in AMC, some of these meme stocks that have already gone up massively will start to follow. So in terms of all these stocks, they're up like 32%, 17%, 13%, etc. So just to clarify, once AMC starts heading downwards, it's a good time to try to exit any positions on meme stocks, in my opinion. So that's going to be it for this video, just a quick update, and I'll be trying to post more updates as I can as price action unfolds over the next day or so, especially for these meme stocks and the markets. So thank you so much for watching, and I'll see you in the next video.